Hey guys, we're going to have a short video here on escrow, good old taxes and insurance. If you find it useful, don't forget to like us. Take a moment and subscribe to our YouTube channel. If you got any comments, take a minute, write those below for us, please. Let's just take a minute and talk about escrow. So first off, if you own a home debt-free and you're selling it to a home buyer, carrying back a note and a deed of trust on the property, we always suggest you collect escrow, which would be taxes and insurance on that property. Of course, you want to have good accounting, make sure that you're using the right amounts for the escrow, for the taxes and the insurance. Now, if you're going to implement a loan servicer, that loan servicer is going to collect that monthly payment, principal, interest, taxes, and insurance. They're going to hold those taxes and insurance in their escrow account and, of course, pay those as they come up at year end for taxes and on the anniversary date of the insurance. Now, one of the biggest issues that a lot of investors have is when you're buying a home subject to the debt. Now, just making that payment to the mortgage company is easy because you're paying whatever their actual principal, interest, tax, and insurance payment is along the way. When you're looking at escrow, make sure you're looking at what other charges may be included, such as MIP, which is mortgage insurance. That's one of those items that you cannot pass through to a back-end home buyer if you're considering doing a wraparound mortgage. Now, if you're going to do a wraparound mortgage with your buyer, you want to know what the actual taxes are on the property over a 12-month period and what are the actual insurance based on the policy your buyer provides you. Of course, you want to divide those by 12, and that's going to be what their escrow is each month. So that escrow that you're charging your buyer could be different than what you're paying the mortgage company. That's okay. Eventually they'll equal out because the mortgage company will catch up with a new amount of taxes and insurance, but they're not going to change it just because you call and ask them to do so. It's going to take them anywhere from 3 to 6 months to change once they get notice of that change, whether it's from the insurance company or from the taxing authority. So you may wind up with a temporary shortfall or whatever it might be along the way, but there's not much you can do about that. In addition, if you bought a home subject to that has mortgage insurance associated with it, you may have to increase your interest rate a little bit or your sales price a bit to help offset that monthly price. Of course, mortgage insurance may be as low as $40, $50 a month, but I've seen it as high as $150 a month based on the size of the transaction and type of deal. You cannot pass that through to the back-end home buyer since they're not getting mortgage insurance, not paying for it. So before you get upset and holler and yell, recognize what it is that you're buying, know how to offset that correctly by navigating your interest rate or sales price on the back end to ensure you're making the positive cash flow you're seeking to obtain on each transaction along the way. As you do that, I think you'll find things flow through pretty easily. If you do that wraparound transaction, your buyer is going to be paying a third-party servicer each month. They're going to collect the escrow, and then they're going to take that money and they're going to pay the first lien PITI direct. If there is an offsetting balance because maybe the escrow with the mortgage company is a little bit higher, you may have to feed that transaction a little bit until they normalize, or you're going to have to expect to receive a little bit less in positive cash flow along the way. So guys, take a moment, learn basic escrow, slow down, look at the mortgage statement when you're buying a home subject to, know where to find accurate taxes. Don't forget that a lot of cities will collect county taxes, but you have to go to individual school districts to get their taxes so you can bind the two together. Know how to do those things. Get good, accurate insurance, and always work off of a good escrow account balance. So guys, I hope you found this a little bit beneficial regarding escrow and how to handle your escrow account, whether you're buying or selling a property. If you liked it, take a minute and like us. Don't forget to check out our YouTube channel and subscribe to it. And if you want to learn more about owner financing, take a minute and check us out at the Owner Finance Network below. Make any comments below, and we'll see you guys next time.